BMO just smashed earnings with a $2.14 billion profit. Meanwhile, National Bank's Q1 2025 earnings left investors disappointed and scrambling for the exits. Why are these two Canadian banking giants diverging so dramatically? Well, in this video, we're going to talk about the difference between these two companies, what exactly happened this earnings, the US-Canada divide that's going on in these companies, and of course, we're going to talk about which of these two Canadian banking giants could make or break your stock portfolio in 2025. Stick around, we're going to cover all this and more in this video. Before we dive into the numbers, we need to talk about why a regular investor should care about Canadian bank earnings, and it's really simple. Canadian banks are the best bellwether we have for the Canadian economy. They track everything from interest rates to consumer spending, and they are impacted by all of it. So by looking at the numbers coming out of these two banks, we can see exactly what is going on and what areas might be key risks for us as investors. BMO and National Bank are both part of the big six Canadian banks, but their strategies could not be more different. As of now, BMO has over 40% of revenues coming from south of the border. National Bank, on the other hand, is doubling down on Canada with massive business in Quebec and massive expansion in the West. Obviously, two very different strategies that leave them exposed to very different risks, and we've seen that in the most recent quarterly earnings. So let's jump into some numbers here. Starting with BMO's blowout quarters, I've got some numbers here on the screen. Net income hit $2.14 billion, up from $1.29 billion a year ago. That's an insane jump in a year. Adjusted EPS crushed expectations at 3.04, which is a 26% beat. But here are the few factors that really drove the growth. First up, US expansion. Their American segment grew 3.6% year over year thanks to higher interest margins and $120 million reversal in FDIC costs. Second, wealth management, which surged upwards, up 12%, fueled by cross-border deals. Huge amount of money there. Third, credit discipline. They set aside $1.01 billion for loan losses, which signal losses are still there, but aren't as bad as people were predicting. It's not all sunshine at BMO. Their Canadian retail/consumer banking segment dropped about 3%, proving that homeowners particularly are still being squeezed by the heightened interest rates. Even with this, the CEO of BMO called this a transformational quarter, and RBC put a $150 price target on their stock. Thanks to all this, stock price was up 5% upon announcing earnings. But let's jump over to National Bank because their story is completely different. And again, I've got some numbers here for them. One of the best numbers we saw at a National Bank this morning, $997 million profit, which looks really solid until you peel back some of the layers. Let's break it down, and we'll start with the good here. Financial markets saved them. Fixed income trading revenue exploded upward 40%, hitting about $907 million. Wealth management division grew 18%, up to $776 million, and U.S. specialty finance division grew profits 24%. All of those are great numbers and contributed to, obviously, their better than expected earnings. Now the bad. Core banking collapse. Personal/commercial net income fell 14% to $290 million, thanks in large part to provisions, which doubled to $254 million. They're also seeing weakness in their loan book, specifically office space. Commercial real estate makes up about 22% of their loan book, and their delinquencies just hit 1.8%. All of this signals to me that some of the optimism about National Bank's loan book being a higher tier, superior, having like a higher degree of safety, thanks to its avoidance of Toronto and Vancouver, might not be playing out quite as well. Just because they dodged the initial waves of trouble in the Canadian credit market does not seem to mean they've dodged all of it. Cherry on top here, National Bank closed the CWB acquisition, meaning there's a lot of expenses coming right now, and we're not going to see a huge amount of the synergies that are predicted until at least the end of this year, maybe into the next year. Thanks to this, National Bank stock dropped about 5%, almost 6% as I'm recording this, but I don't know how the day is going to close out. So now the question, what exactly do I predict for 2025? Well, I think it's pretty simple. If there's a Fed cut, if the US economy stays strong, if US wealth management stays strong, I think BMO should easily hit that $150 price target in 2025. I think it's probably going to have a great year. National Bank, on the other hand, I think is basically treading water until they see one of two things. One could be the fear in the Canadian economy leaving, which would mean, maybe no more tariff threats or interest rates getting back under control a little bit. Inflation no longer the boogeyman hiding in the corner that might come back, right? All that fear in the Canadian economy, if that settles, we could see National Bank stock accelerate again, representing its massive growth. Or two, they start seeing the synergies from that CWB acquisition faster than expected, right? If they see that by the end of this year, we could see they end the year really positive. Otherwise, I think they're basically treading water in 2025. I think BMO is probably up to 150. Now, that doesn't mean that I don't think National Bank is still a better investment long term, talking multiple years. I just think it's going to be a tough year for them if this trend continues. If the Canadian consumer is weak and Canada is weaker than the United States, well, obviously it's going to impact a Canadian-focused bank more than it's going to impact one that has more business in the United States. It's going to be really interesting to see what happens here with bank earnings coming out again tomorrow. But for right now, BMO looking great. Their US business really, really bailing them out. National Bank being so Canadian is a downside when the Canadian economy is in a tough spot. But I want to hear from you. Which of these two banks are you buying in 2025? Which of them do you think is a better investment? Drop a comment down below. I personally have given my opinions. I'm a National Bank fan all the way. It's a big position for me. But I have mentioned a couple of times that this is like a 5-10 year position for me. And I would not be shocked to see BMO crush them in 2025 just because the United States seems like it's going to outperform. Obviously, trends change fast, as we've learned in the last couple of months. So really interesting to see what happens. That all being said, that's all I have for you folks today. Please do like the video and subscribe to the channel. It makes a huge difference. Doesn't cost anything. And check out our most recent video. We talked about the crash coming in like retail favored growth stocks. Really interesting market trend kind of going on where this hype that was sort of unsubstantiated fell down. I'll let me from yesterday talk about it. Video is going to be linked, end card right here. And I hope I see you in the next one.